Welcome back to the new Sharma FX weekly forecast, and we are going to go over the Forex analysis on technical side and also the weekly Forex forecast on the macroeconomic side as well. We are going to go over first the macro narrative, and then we're going to connect it to the structure on the chart so you can build out a clean weekly trading plan. And very specifically, we are covering US30 or Dow Jones analysis, NAS100 analysis, GBPUSD, EURUSD, GBPJPY, USDJPY, and gold. So let's go ahead and start off with some macro fundamentals first, and then we are going to move over to the economic calendar, then finally the technical analysis. Let's start with risk sentiment because it sets the tone for US indices and the Forex pairs that are tied to risk that we will be covering today. In this article here, the key headline is that Asian markets are poised for a weaker open with tech concerns that are rising and the risk sentiment that is also fading out. US stocks slumped on Friday after a disappointing sales outlook from Broadcom that fueled anxiety around the AI trade, and the S&P 500 dropped about 1%. The broader story here is that the global risk sentiment has been fading amid the skepticism that tech stocks, which have rallied hard for years and driven global benchmarks to record highs, if they can keep justifying lofty valuations and aggressive AI spending. But it is specifically important for Asia because that region is heavily exposed through the supply chain, where they're manufacturing the components that is needed to power this tech boom. So a pullback in AI optimism can hit the Asian equities super fast. One analyst very specifically states in this article that the risk is if we see AI bubble burst at some point in the near future, and because Asian markets have benefited from the AI and tech strength, they may take a step back if that trade loses momentum. Now we have another article that gives us another perspective on this, but from an investor perspective. It's been 3 years since OpenAI sparked the AI euphoria, and money is still pouring in, but the doubts are starting to increase now. Not just about the tech, but also because of the economics around this entire AI euphoria. The main concerns here are the enormous cost to build AI, the uses of AI, and whether consumers will pay enough to justify the spending. This article here, as you go through it, will also highlight the visible stress points related to AI. For example, a sell-off in NVIDIA, Oracle plunging after reporting higher than expected AI spending, and broader nervousness around companies tied into the AI infrastructure build-out. It also explains why this matters so much for the markets, and that's because the biggest US indices have been driven by mega cap tech and AI infrastructure winners. So if that leadership slows down, then the indices will 100% feel it. They also point to the capital side as you continue down. AI data centers are expensive, and the debt-funded expansion can pressure companies because bondholders need cash on schedule. And they used Oracle here as example, where Oracle has big CapEx needs, bond issuance, and also credit markets that are now starting to pay attention. Then it also adds a very important nuance to this. While there are pockets of speculation, current valuations aren't the dot-com era extremes. So the debate isn't really if there's going to be a crash tomorrow, is it inevitable or anything like that. It's does the growth keep accelerating and does ROI justify the spend? So the key takeaway here for this weekly Forex forecast is that this is a risk sentiment environment where equities can get choppy, the Santa Claus rally optimism can struggle, and that volatility spills into Forex through USD flows and JPY reactions, especially into pairs like USDJPY and GBPJPY. Now let's go ahead and move into the policy drivers. We're going to start with some central bank news and very specifically with some Fed news. This week overall is just loaded with central bank context. So the theme across this rich world is what this article calls it. It's very simple, that the rate cut momentum is starting to fade out. The final flurry of major central bank meetings for 2025 is likely to show that the easing cycle either lacks fresh momentum or that it's effectively over, with central banks also stepping back to assess how their moves so far are impacting growth and inflation. So now starting off with the Fed news first, we have Cleveland Fed President who says that she would prefer interest rates to be slightly more restrictive to keep pressure on inflation. She also describes current policy around as neutral, and she would prefer to be a bit more restrictive because inflation has been above the target percentage and recently stuck closer to 3% rather than the 2% target. Then we also have the Chicago Fed president, who says that he is expecting or projecting more cuts in 2026 than many of his colleagues. But he also dissented against the most recent cut because he wanted to wait for more inflation data. He also emphasizes inflation has been above target for years, progress has stalled, and price pressures remain a major concern for him. So overall, going into 2026, we see that the Fed is overall split, where the Fed officials are giving opposing views on what to do next. Some are focusing on inflation risk, others are focusing on labor market risk, and that's why the path going into 2026 remains more uncertain than the markets would really want. Now, moving on to ECB, we have in Europe, the Economist survey piece suggests that the economists are increasingly thinking about the next shift, which could possibly be up, aligning with the idea that the inflation stabilizes near that 2% rather than where it's at right now. And the EURUSD also is expected to run more bullish as we get closer to this ECB window, which of course matters a lot for this EURUSD forecast because heavy positioning into an event will create a lot more volatility, squeezes, and fake outs, which is exactly what we see anytime any sort of interest rate news is about to come out from a major central bank. And we see this a lot more often with ECB, with BOJ, BOE, and even the Fed. Going back to the first article, if you scroll down, then you will get news about the BOJ and the Bank of England. So let's start off with the BOJ since it's right here. The BOJ is widely expected to hike interest rates while BOE is expected to cut, and the market is watching if that Bank of England move could be among the last cuts in this cycle. So the central bank theme for this week is divergence and uncertainty, where you have the Fed who is divided, you have ECB who's less dovish, Bank of Japan is expected to hike their interest rates, and Bank of England is expected to cut their interest rates. So that mix is exactly what drives the Forex trends and why GBPUSD, EURUSD, USDJPY, and GBPJPY can have big weeks when the data confirms this narrative this week. Now let's go ahead and move on to some bond news because this is the engine behind the US dollar and the overall risk sentiment in the current markets. The Treasury market debate over how many Fed cuts are coming is now starting to heat up because we're seeing a string of pivotal economic releases filling the data void created by the shutdown a couple of weeks ago. And the bond traders are betting that the Fed will lower rates twice next year. And if that pricing is right, then it would support the treasuries. But the key thing here is that the market isn't really settled. Some participants think that the Fed is close to done. Others think that the Fed will have to cut even deeper if labor market weakness starts showing even more clearly. So why do we care about this? And how do bonds really tie into our charts? Because for USDJPY forecast, this pair is extremely sensitive to rate differentials and yields. So if data reprices yields fast, then USDJPY will also swing super fast. For gold forecast or gold analysis, gold reacts to real yields and risk sentiment. Softer yields can support that continuation that we have been seeing, whereas yield spikes can trigger the sharp pullbacks even if gold is currently inside an uptrend. For US30 analysis and NAS100 analysis, if AI leadership stays shaky and yields stay volatile, then we can expect that the indices will also whip very hard. So pretty much bonds are the amplifier this week, and the data will decide the direction and the price action will confirm that. Now let's go ahead and finish up with some geopolitics, look at the economic calendar, and then move on to the technical analysis. So starting off, we have some geopolitics news here from Trump, because this is the risk premium driver that can hit JPY, gold, and equity indices fast this week. We have headlines around US soldiers who were killed in Syria and the retaliation language from Trump. And we also have pressure for talks amid the regional tensions as well. The main point isn't to really predict the outcomes here, it's just to understand that geopolitical headlines can become the catalyst that accelerate whatever the market is already leaning towards. So if you see a sudden spike in gold, a sudden JPY move, or indices moving risk off very quickly, this is a layer that will override everything in that short term. But overall, what we see is that these tensions are pretty much, remaining elevated. We haven't had any sort of confirmation from the Middle East of any peace talks or even having a peace agreement. We had some advancement towards it, but never really had a full confirmation of it just yet. And a quick note, the reason why I'm structuring these weekly outlooks as macroeconomics, then, giving you guys an explanation around the market sentiment, and then we do technical analysis at the end, is because I'm building a 12-week accelerator where I'm walking my traders through a step-by-step process to do this exact analysis on their own. So then they can build their own trading strategy with clarity, consistency, and not really having to rely on anyone else's bias, no signals or anything like that. So I'm making this weekly outlook just to give you guys a perspective from my side of what I will be trading, what my students are trading, and what we are making profits off of while trading in the live markets. But understand that I would want all of you to get to the point where you can build your own trading plan and your own trading strategy and be able to do this exact same analysis on your own too. All right, now moving into the economic calendar, what we're taking a look at this week, we start off quite easy, and then we have some CPI data coming out tomorrow in the New York session from Canada. So if you're trading the Canadian dollar, this is what you want to pay attention to. Then we have more FOMC members who will be coming out and speaking. So this is something that we want to pay attention to, just so we have an understanding of what are we looking at going into January or even Q1 of next year to see if we're going to get any other rate cuts. That sentiment is really going to push a lot of the price action and the sentiment when it comes to the indices very specifically. Then going into pre-London session on Monday, you have UK news coming out with employment data, claimant count change. You have the average earnings index coming out and the unemployment rate. Then from the Eurozone in the London session on Tuesday, you have PMI data coming out. Germany's is very important because Germany is one of the biggest economies in the Eurozone. And then you have UK's flash manufacturing and services PMI coming out as well. We always want the number above 50, at or above, because that indicates expansion, and anything below that would be considered contraction of the industry. Then we continue down. Tuesday is really when things start picking up in the New York session, where you have the retail sales coming out, you have non-farm data that's coming out, and then unemployment rate. But all of this that has a star next to it, all of this is delayed data, right? So we're expecting that core retail sales, for example, is going to slow down. But so I'm expecting that when this data really comes out, a little bit of volatility, but not too much where it really changes the overall trend. I'm expecting the market to react to this and then also maintain the overall structure from higher timeframes that we're going to go over on the technical analysis side. Right after that, then you have the updated current manufacturing PMI and services PMI data coming out as well from the US. So Tuesday is going to be very important in terms of trading New York session. If you're doing scalping, so if you're a scalp trader or you're doing day trading on US30 or even swing trading opportunities, I think this could be a good day to set you up for those opportunities. If you're doing scalp trading, then this would be a perfect day to scalp trade right when New York session opens up. And even day trading opportunities could really give you great entries. And the swing trading would really set you up for the next week or so. Let's continue down. Then we have CPI data coming out from GBP as well in pre-London session on Tuesday. Then continue down. Wednesday, things get a little bit easier. And then they pick right back up on Thursday as we get interest rate news coming out from Bank of England. Again, we just went over that in a very detailed manner. And then we also have interest rates coming out from ECB. And then we have CPI data coming out from the US as well during New York session. So you have the year over year, you have month over month as well. And then you also have core CPI data coming out. Then continue down the same exact day, you have Bank of Japan's interest rates also coming out. We're expecting another hike there. Whenever you guys are trading these interest rate news, we already know what we're expecting in terms of, are they going to cut rates? Are they going to maintain it? If there's a surprise, let's say, for example, with Bank of England, we're expecting that there's going to be a 25 basis point cut. If they maintain it at 4%, that would really be a surprise. That's really when I would expect a lot more volatility in the market. But really what you want to be trading is the sentiment that the monetary policy is here set up. What does it mean? in terms of, are we going to get more rate cuts? Are we going to maintain the rates? What is going to be the decision that any central bank is going to be taking for that specific currency going into the new year? That's the sentiment that a lot of the traders are setting up for. And then also the press conference news as well. So during the press conference, what is the central bank head saying? Are they answering questions from the press? And what kind of sentiment are they setting up? So remember, fundamentals are absolutely the drivers of the market, but it's not necessarily just the data point that's coming out. It's whether the data point misses the previous or the forecast, and what type of sentiment is it setting up. And that's what you're trading. Even when it comes to price action is just a visual representation of the market sentiment. For example, if the data comes out here and we do end up getting a rate cut, then from an equities perspective, you're going to see a rally there, because that's the sentiment that the investors have set up. They're looking long term for the next, couple of weeks, couple of months, or even longer term, depending on the type of trade that you're taking. It's really the sentiment. So the fundamentals will drive what do you feel as an investor, the decisions that you will be taking as an investor, thinking about long term. And then the technical side is simply a visual representation of what we're seeing on a global scale, on a bigger scale, even from the institutional and the bigger player perspective. So that's how I want you guys to start thinking about fundamentals as well. Now let's go ahead and take a look at the technical side. And I guess we're going to start top down first. We're going to go from gold and then end off at US30. So starting off with gold, on the weekly trend, we see that clearly it's a bullish structure to the upside. We got some clean higher highs and higher low formations, prices holding above the prior breakout zones, sitting at all-time highs. And there's no break of structure in terms of a bearish movement just yet. So the trend is still very much intact, but as you can see, we are also extended out. So the risk is that this week is pullback before continuation, not necessarily a reversal. That's what you would want to see in a healthy structure, where price pulls back in the beginning of the week and then continues pushing to the upside. So for that, we're going to mark off our weekly highs and lows. You've got your top wick rejection from the previous weekly candle, which is 43.53.3. And then I'm going to mark off the support. As we drop down to lower time frames, we will definitely narrow in these levels even more to look at what is the level or the zone that price needs to break right now before it can head back up or come further down. Now, when we come onto the daily time frame, we see that the pullbacks are simply corrective here. They're not impulsive. That means that sellers aren't taking control here. They're just taking profit. So the playbook here is going to be very simple. We're not chasing the highs. We're going to wait for a pullback into some of these key zones here, and then look for the continuation confirmation here. And that's exactly is what's going to keep this gold forecast bullish, and the gold analysis, stays trend following while the structure holds here as well. So what we're really looking for is, if I were to narrow this in even more, I see that that's the clear resistance even on the daily time frame. That's where Friday closed out with the top wick rejection. So what I'm going to do is mark off a support right here, which is sitting on top of these wick rejections here to the left. If you want, you can bring it down a little bit more, kind of sit right below the support area right here overall, which is your 42.56.2 area. So what I want to see here in the next couple of days or so, pretty much to start off the week, is another push down to come back down into 42.56.2, maybe a little bit deeper, coming into the 4200 mark, and then continue back up bullish, especially as we're seeing more geopolitical tensions that's remained elevated, the volatility that's increasing because of the skepticism around AI and the AI bubble and all that stuff. So I'm expecting that, gold is going to come back and tap into those all-time highs, come back, and 4400 is what I'm watching. And then after that, I'm going to be watching 4450 and then 4500. Let's continue down onto the 4-hour. So after that nice rejection on Friday, we already got a bottom wick rejection here. We got a new 4-hour candle forming right here. So the new weekly candle just started forming, and we don't really have a much clear direction here. So once again, just wait for a little bit of a pullback and then a continuation back up for those clean buy opportunities. Now let's come over to USDJPY on a weekly time frame. So there's not really a clean trend here, because overall, it does seem like we are sitting bullish, but it seems like we're kind of stuck in this area here at the moment. It's rotation inside of this broader range that we're looking at. We're not getting a clean follow through just here because price keeps rejecting the same exact level, rejecting it, and then pulling right back down. And we've had that happen in the past too. Price did try to break above, but then it came right back down after that and then pulled right back into this previous support area, which is a key liquidity area. How do you know that? Because every time price has bounced off of it, it's gained enough momentum for these massive movements to the upside. So right now, this is a setup basically for clean swing opportunities that we'll get on a weekly and a daily level, as long as some of these levels here are respected. So this is kind of the environment where you need a lot of patience as a trader. You need to wait for price to reject off of these levels in a very clean manner, and then look for your trade opportunities in either direction. Again, we are going to adjust this as we drop down to lower time frames by marking off this key resistance and previous support area here on the weekly time frame, which is that top wick from the previous weekly candle. Then I'm going to mark off the support. So I'm just going to right here on the bottom wick, and then that previous resistance here too. So this is my range that I'm looking at this week. Let's drop down to the daily. So once price breaks out of this range here, then we have those clean swing trade opportunities in either direction. If we're looking for buying opportunities, then we have a clean swing as price breaks above this. First, you're targeting about 91 pips for that wick fill. Continue to the left, then you have about 190 pips, and then after that, as you can see to the left, there's really nothing stopping it from coming right back up here for about 475. So small steps at a time. First, you're going for about 90 pips to 100 pips, and after that, almost 200 pips. In between here, you're looking for your day trading opportunities or even scalping opportunities, which we are going to narrow the zones in a bit more on the lower time frames. And then if I'm looking for sells for any corrective moves, as price has rejected here previously, and then usually we see a sell-off, then I want price to break below 154.9. Continue down for a wick fill, that's about 50 pips. So you're looking for a quick scalp, or you're looking for a quick day trading opportunity on USDJPY. This is it. And then a further continuation down, I'm looking at the next support area, which is going to bring me down for about 127 pips. And then if you look at my cursor and you look to the left, we clearly see a lot of wick rejections around here. And then after that, it's a further sell-off coming back down below 154 mark. So overall, if you can target closer to 182 or so, if price continues to follow the same exact movement here. But for that, of course, we need the data points. So we have BOJ, interest rates are about to come out. We have CPI, PMI. We have so much data coming out this week that we just need to be a little bit more patient. So here, overall, from a price action perspective, what you see on the daily time frame is a lot of compression on price action. So you see those higher lows are forming, but highs are still capped out here, meaning that liquidity is building on both ends, as we can see, right? You got those wick rejections, fake outs, and same thing down here as well. And we're basically now waiting for that volatility, what you would call expansion. So you basically want price to give you clean support areas, clean rejections, and then give you that volume so then you can look for your swing trading opportunities. So what we're not going to do here is force any mid-range entries. So price pretty much sitting right here. None of that. If I'm going to scalp this, I'm going to scalp this in either a New York session, right when it opens up, or I'm trading this when there's JPY news that's coming out. So not when Asian session opens up, but when there's JPY news. So then there's a catalyst for this move to, or this trade to move, or this pair to move. So on the 4-hour time frame, what I'm going to look for is price to break above this area right here, continue pushing to the upside. Those are going to be your scalp opportunities. As price continues to push, turn that into a day trade for about 82 pips. For any sells, a little bit of a bigger range, just so we clear out of these wick rejections. But once price breaks below it, you got about 60 pips to the other side. We're not looking for a trade in between here. We see clean rejections. We see that clearly price is kind of stuck in this area, and it simply comes back to create those lower high formations just for another sell-off to come back and tap into 154.9. So if possible, There are other opportunities that are setting up this week for other pairs. So if possible, look for those if you're trading, if you're scalping, if you're doing day trading, and then use this pair for your swing trading opportunity rather than scalping or rather for day trading. Let's come over to GBPJPY now. This is one of the cleanest bullish structures that we have seen. So looking at USDJPY and comparing that to GBPJPY, just in terms of price action and structure, that is what we want to see. We want to see this movement here. We want USDJPY to break these previous highs and then continue pushing. Those are the clean bullish structures that we want to see and we want to trade. Or even if price breaks below this, then those clean sells. So that should be another motivator for you to stay away from this unless there's a clean swing trading opportunity that sets up. Now, as I zoom out, I see that clearly we have broken these previous highs that price failed to come back and revisit for almost over a decade. The last time we did that was back in 2008, and now we came back and retested into that back in 2024, and now we have finally broken past that. So all this time in between, we failed to come back into those clean levels up top here. So what I'm going to do here is now mark off the previous top wick rejection, which is this, at 209. And then I'm going to mark off this resistance right here. So I'm not really paying attention to the weekly candles here because this is the main level, but we will adjust it as we drop down to lower time frames. This is just telling me that this is my range. If price does reject this resistance, this is ultimately where I'm expecting price to come down to, or as a potential swing trade opportunity, which is that 206.1. So here we are seeing a clean weekly trend, which is very strong, higher highs, higher lows, and we're holding above these key prior resistance levels too. Now, when we come onto the daily time frame, it becomes a lot more clear that we are starting to exhaust out. What I'm going to do now is I'm going to look at what level does price need to break right now before it heads down for a stronger swing, which is going to be right here below these daily bottom wick rejections. As price breaks below that, then I know that I can look for a swing trade to come back down into this previous resistance for about 68 pips. Continuation down, if it wants to come back into these previous support areas, then you have about 237 pips. You look to the left of what price has been doing. That was a very hard rejection back in 2024, and then a massive sell-off to come back below that 186 mark. And anytime price has tapped into that area or come pretty close to it, we see that clearly there's a massive bullish push right back up. So you see another run up, comes back, revisits, another run up, but again, creating those higher highs, pulls right back down, and that's what really starts that massive rally up. After that massive rally, we get another, again, a fundamental catalyst that pushed this pair right back down into the support, and then we started holding out a support area right above it. So there's a very key level here that we're expecting price to pull back into, which is this, which is going to be that 200 level. If price rejects off of the current resistance very heavily and it breaks below this and then it ultimately breaks below this, then the next area of stop is really going to be around this 200 level for it, which is that massive swing trade opportunity that you can set up for. So right now the pullbacks are not really there for any sort of swing trade confirmation just yet, but these pullbacks are basically just shallow. They're very corrective. No bearish break of structure here just yet. So this is still a continuation market. This is still a bullish market. All we're going to do for any continued bull buying opportunities is going to be simply to buy the dip, buy any pullbacks into the structure, which is again, first area is this at the lowest. So what that means is price rejects off of this simply and then pushes right back up. Scenario 1. Scenario 2 is price pulls right back down into this zone, not really breaking below this 205 area or so or into the support, and then another pullback and a continuation back up. Those are the buying opportunities that we're looking for swing trade opportunities. Let's drop down to the 4-hour time frame. On the 4-hour, you just see a ton of consolidation. For sells, again, you can look for those sells to come back down into this around 205 area or so, which is down here, which should give you a pretty good opportunity for about 124 pips, maybe a further continuation down for about 244. And then after that, we're expecting a bounce right back up or even a little bit deeper and then a bounce back up. but really just staying closer to this 205 area, 204 area. If it breaks that 205 or 204, then we're headed down into 200, into these previous liquidity areas. Again, if you want to identify, how do you know which area is a liquidity area? Look at the volume that tends to follow right after that. And you will also see it from the price action and the candle structure setups too. Now let's go ahead and move on to your USD analysis here on a weekly time frame. We've had a nice little pullback and then price pushing back up, but currently we're rejecting off of these previous resistance areas here too. So this is still more of a range market on the weekly time frame, but we haven't really broken the previous highs here just yet. We're getting ready for it. You can see that from a price action perspective, and then of course from a fundamental perspective, there's a lot that's happening this week, which is going to give this pair a lot of momentum to move in one direction or another. So that is right now 1176, so 1.176 resistance. In terms of support, I'm going to mark it off with the current bottom wick rejection or the previous candle's bottom wick rejection. So that way you're really encapsulating all of this consolidation that's happening right here in the middle. That is your 1162, 1.162 level. And we're rejecting off of that right now, that resistance, and then pulling right back down. So when we drop down to the daily time frame, we see that within this range, it's a very choppy market. There's internal breaks with limited follow through, as you can see here, and the price pulls right back up. So that tells us that this is a market where execution will matter more than us really predicting where is price headed. What that basically means is that you're looking for a clean break and hold in either direction. So price breaks above this, retest, and then a continuation up, or breaks below this, retest, and a continuation down, or a clean rotation from these range edges. So now what we're going to look for, even if we're looking for swing trade opportunities, is price to break these previous highs and then continue pushing, or break these lows and then push back down. Those are going to be your swing trade setups. If we're looking for any sort of day trading or scalping opportunities on EURUSD, first of all, I would kind of stay away from it with the current market conditions, especially as we're closer to the year end. But if you definitely have to scalp this pair or you're looking for day trading opportunities on EURUSD, you wait for price to break below this, let's say 1.17 area, kind of just rounding it out, with the price here to the left, and then a continuation down for about 84, 86 pips. But as you can see, it is a lot of messy price action. So if you can stay away from it, I would, until price can break either of these levels with a clean hold above it or below it, and then a continuation. All right, now we are up with GBPUSD. So quite similar price action as EURUSD. The weekly here really isn't giving us a clean movement, clean continuation just yet either, so we're really just waiting out for this pair too. That is the previous weekly's top wick rejection at 1.344, and then we also have what I'm going to mark off as this previous support here to the left. What I want to see as I drop down to these lower time frames now is, what is price doing here? Am I seeing a lot more consolidation on the daily time frame? If so, we're going to adjust our levels a bit more, but this tells me that this is my overall weekly range that I'm looking to trade unless price can break out of these levels here and give me better swing trade opportunities. Now, when I come onto the daily time frame, I see that price is clearly, if I adjust this down a bit more, holding this area out at support, and then it keeps bouncing off of it over and over again, right? But as we get closer to the more current price action, you see that it starts the short-term bearish structure to the downside as it retraces simply for lower high formations and then a pushback down. We came back down, we had a nice little corrective move here, price held onto a support and then pushed right back up. So what I want to see here is this simply another lower high formation where we see another sell-off coming back down into, let's say, this 1.3 area, or this price going to give me another retracement. Let's say tap into this 1.327 and at the most, and then push right back up, come back and revisit into this consolidation area here. So that is 1.34, drop down to the lower time frames. So swing trade above or below, and then for day trading on GBPUSD or scalping on GBPUSD, then you wait for price to break below this area, push back down. Quick scalp opportunity is to come back into this consolidation support here to the left for about 36 pips. Continuation down for 56 pips. You can even turn that into a day trading opportunity for about 82 pips here. If price can break below that, then we're looking for cleaner moves, much cleaner moves for about 75 pips right off the bat, and then a continuation down for a wick fill for about 144. And then if price does end up coming back down closer to this 1.3 area, then you have about 224 pips up to about 256. For any buying opportunities, if price can simply hold on to a support either here or here and then bounce back up, then I'm looking for clean buys above this area, which is the safest trades I'm going to be taking as we close out the year, really protecting my capital and all the profits that I've made this entire year. Starting off with 38 pips, again, quick scalp, continuation up for about 73 pips, even further up, coming into about 115 pips or so, and then tapping into this overall consolidation resistance where you see most of this consolidation here for about 195 pips. It can definitely continue a little bit higher than that. If it does, great. We'll scale in. We'll take some more profits and we'll scale in with more and continue to the upside. But for the most part, that's the extent of my trade that I'm looking at to really close out the year. All right, let's go with NAS100. All right, so we already talked about from a fundamental perspective how on Friday the markets closed out bearish. So now we're going to take a look at the weekly time frame. What are we really expecting here from a price action perspective? And you see that from a price action perspective, NAS100 on a weekly time frame is still structurally bullish. You see those higher high formations, you see those higher low formations, but the momentum is obviously slowing down at these all-time high levels that price is sitting at. It starts to get a little bit more choppier. So what we're looking at is this previous resistance that was marked off with the previous weekly candle, which is 25,735. And I'm going to mark off the current support as well, because if price breaks below this, then we're looking for sales to come back down into this previous support here closer to 24,200. And this is 25,098. Drop down to the daily time frame. Again, right now it's simply slowing down. The momentum is slowing down. So, we're expecting that price action is going to be a little bit choppier. We already saw that from the weekly time frame where there was a lot of consolidation, but this is not necessarily a reversal here just yet. On the daily time frame, we see that pullback and then a continuation up here. We saw a slowdown in volume as price action did approach this 25,700 area here again. And then on Friday, that sell-off that we saw. So right now, this is kind of still more of that buy the dip behavior but the volatility is still, higher near the top, and we see that. So I want structure-based entries here. What I'm going to look for is any buying opportunities as price continues to reject these levels. As we're at the lower end of this 25, let's say almost 100 area, if price can establish a very clean support and then continue pushing, I would definitely look for buy opportunities here for quick, scalping or even day trading opportunities on NAS100, and then potentially the same thing on US30 depending on the price action there. So these are the pairs that I would look for scalping or even day trading, including with some of the other pairs that we just looked at as well. Let's continue down onto the 4-hour time frame. So my ranges are still going to stay the same on the daily time frame. That is still my entire range. And this is a very clean setup. So if price can hold on to support here and then continue pushing back up bullish, ideally I would want to look for those buying opportunities as price breaks above the support area here and then continues pushing. As that happens, I'm looking for a very clean move with first TP being somewhere around here, which is previous support, and then a continuation up into the 25,735 area. And then if the trade runs after this point, my entire trade should be completely risk-free. So I'm basically just letting runners go. If price wants to run back up, then perfectly fine. I would let that happen. And then I would look for a scaling opportunity above this to come back into those previous highs. Let's come over to US30. So on US30 overall, we see tapping into new all-time highs, structurally also very bullish, very clean continuation setups, still trending, no signs of any sort of sell-offs or anything like that here just yet. So same thing as NAS100, we mark off the highs which I would just say is 900. And then support, I'm going to draw that out on the daily time frame. I'm going to look at where price has rejected the most, which is right here, a hard sell-off. Price approached that here again last week, and then on Friday we closed back down bearish, and that is 48,300. Drop down to the 4-hour time frame. If I'm looking for any scalping opportunities here on US30, wait for it to break the previous 4-hour high, continue back up bullish. As that happens, then I have a pretty good about, let's say, 300-point move to the upside, and then a further continuation up to 49,000, or even a little bit higher if price does want to create a new all-time high. If price just rejects off of this one more time and then pulls back down, then you have much cleaner sell opportunities to the downside. So again, same thing here, no signs of just heavy sellers in the market here just yet. But if we can break below 48,300, then we're continuing right back down into 47,500 area. So you have about 800-point move that you're looking at as price reverses back down from 48,300 to around 47,500 area to come back into this support. So those are going to be your quick scalp opportunity or even day trading opportunity on US30 between this range of 48,900 and 48,300, which is about a 600-point move. And then if you're looking for swing trading opportunities, ideally I would want to see price reject off of this area here one more time, come back, revisit some of these highs, and then give me a stronger sell opportunity. That way I can catch a much better scalp, turn that into a day trade, give me another retest of 48,300 or closer to that level, and then a further sell-off coming into 47,500, then the next support, and then ultimately down here. This type of move is, I don't think that's going to happen this week if all the fundamentals and economic data is pretty much in line. But if we get surprise data, then definitely that move could happen. But I'm really expecting the sell-offs to really come back just into these areas and then pull right back up as we get closer to that Santa Claus rally optimism. That's pretty much it for this week. So the big picture here is that gold and indices are trending, but we're not going to be chasing the highs here. We're going to wait for our proper setups prior to an entry. USDJPY is pretty much in compression, so you wait for your confirmation there. You wait for price to break out of consolidation and then look for your trades. GBPJPY is following the trend, so you buy the pullbacks there. And then EURUSD, GBPUSD, we're looking at them pretty much as price breaks those resistance or support levels and then continues to follow the trend. Comment below which pair you want a deeper breakdown on, your USD, GBPUSD, USDJPY, GBPJPY, gold, US30, or NAS100. And I will see you guys in the next weekly Forex forecast. Trade safe. Make sure you guys are not over trading.